And we are live. Welcome, everyone. Good evening, good night, good morning. Uh, Welcome to this trading tech talk called The Missing Piece. I'm going to show you something today, and I'm super excited about this, which has been in the making for a long, long time. We've been talking about this internally for many, many months, and also I've mentioned it a few times, perhaps you guys out there, if you're following our webinars throughout the weekend, the months. And what this is all about, yeah, I'm going to keep the mystery up just a little bit longer. What this is all about, we're going to find out together today in this Tech Talk. It is October 29, 6 p.m. Eastern Time. My name is Daniel, and I am greeting you today from our beautiful office here in downtown Montreal in Canada. And before we get into the technical stuff, let me ask you, where are you calling in from today? Who do we have in the room today? And you can see we do have a very full room. Wow. Okay, we have, yeah, please put your location into the Q&A box. We have Mark from Dallas today. Not, I believe, normally Birmingham, this time Dallas. Hey, Mark, nice to see you. We have Steffen from Hamburg. Wow, Steffen, well, thanks for joining. It's late over there. It's midnight in Germany. Arthur from Hamburg, too. Same thing for you, Arthur. Arthur, thanks for joining. John from Venice, Florida. Hey, John, how's it going? Nice to see you. Donna from Virginia. Hey, Donna. Gerald from Santa Fe. Hi, Gerald. Good to see you again. Stuart from Toronto. Hey, Stuart. Are you excited for what is it, game five today in the World Series? All right. So where's Larry? From Baltimore. Hey, Larry, what's up? Paula from New York. Hey, Paula. Andreas from Mainz, Germany. Also a late starting time. Manny from Birmingham, United Kingdom. I almost said United States, United Kingdom. Perfect. Stuart says, go Jays. Yeah, of course you do. Stephen from Lincoln, UK. Juan from Asunción, Paraguay. That's awesome. Wow, cool. I've never been to Paraguay, but I heard it's really nice. And we have Suhail from Louisville. Perfect. Well, thank you guys so much for sharing your location. Once again, a truly international crowd, which is awesome. Which is really humbling, in fact, that we can reach such a worldwide audience. In fact, and we also have Rajiv from Atlanta. We have Wilhelm from South Africa. Hey, Wilhelm, what's going on? We have Sally from Beverly Hills, LA, and Werner from Frankfurt. Hey, Werner, how's it going? Nice to see you again. And Senna from Cascais. All right. And then we have somebody from Virginia as well. Awesome. Well, thank you guys so much for sharing your location. Let's get into it. All right. First off, this session is being recorded and the recording will be sent to you shortly after this webinar finishes. So should you need to drop off, I hope you don't, but should you need to drop off, no problem. You can watch the recording afterwards. Also, as I mentioned before, we are super excited to see everybody in the room today. It's a super full room. I think it might be our record attendance, which is really cool. Thank you guys so much for joining us. I know we all have busy lives. You have busy lives. So taking time out of your busy schedules to join me, to see me talk, to join us talk, this means really the world to us. So thank you guys so much for being part of our trading journey. And for those of you who perhaps don't know us yet, we are tradingindicators.com. And my name is Daniel. I'm the guy here on the left-hand side. And together with Homa, we have created trading indicators from the ground up about 10 years ago. And as the name suggests, we specialize in the creation of innovative trading indicators. That's our bread and butter. We have built thousands of trading indicators for clients all over the world for all kinds of platforms. And today, we're going to show you our latest creation, our latest indicator, which has been in the making for many, many weeks and months. And also, we have Niklas today in the room. Niklas will be giving you the demo of this brand new indicator a bit later in this presentation. Niklas has joined our crew about 5 years ago. Now, real quick, most of what we do is based on what's called technical analysis. And today won't be an exception to this. So what is technical analysis? It's basically a mathematical analysis of your price chart. It's a pattern analysis of your price chart. We believe that fundamental information, thanks to the efficiency of today's markets, is most of the time, mostly immediately priced into your chart. And by analyzing your price chart from a technical point of view, you will indirectly take into account fundamentals as well. We also believe that trading should be simple, and in fact, trading is simple, but you need to know what to look for. And today, We're going to show you a tool which will once again attempt to simplify your trading approach, which will do most of the heavy lifting for you. So that you, as a trader, you can focus on what really matters, which is to make that final trading decision. And of course, guys, if you have any questions, don't be shy. Put your questions into the Q&A box, and we're going to hold at certain points in this webinar to address all the questions that you may have. All right. So I also need to remind you that trading does contain risk and therefore is not suited for every investor. If you trade, make sure to only use risk capital, which is money that you actually can afford to lose. When it comes to backtest performance or hypothetical performance, keep in mind that this is not necessarily indicative of future performance, and any trade ideas and strategies and setups discussed in this webinar should not be construed as trade advice. These are for educational purposes only. All right, so with this out of the way, let's get into it. I'm going to start with, a bit of an informal introduction of what we're going to be looking at today. So what we're going to do now is we're going to look at some chart examples first. We're going to have lots of live charting later on, but for now, let's look at some prepared examples. So this is a chart, which you can see here. It's Super Microcomputer SMCI on the daily time frame. And just by looking at this chart, what could one see on this particular chart? What do you see here? Well, I personally see two things, and of course, there's many things that could be pointed out, but two things that stand out. One thing is, this big empty space. Did you see this one? The space between this candle and this candle down here, that's a really big empty space. And here also, at this point here, look at this one here, for example, we have another such empty space. And these spaces, and you may know this already, these are called gaps. And it can happen in both directions. You can have an up gap, for example, in the market where, we have the previous candle, and then the next candle gaps up. It starts much higher, for example, than the previous candle. That's an up gap. And here, it's the opposite. We have the previous candle, and the next candle starts much, much lower than this previous candle. We call this a down gap. Now, the beautiful thing about these gaps is they have future telling properties. They can forecast what may happen in the future to some degree. All right, so what is happening next after these gaps? Let's check it out. Well, for example, here, after this up gap, look what happened. Price went down, it came down again, and it did something which we call it a gap fill. You can see it here, price came all the way down to the end price of this particular gap. And the same thing here for this down gap. You can see price initially continued in the downwards direction, but then it came back up and it did something again. It did a gap fill at this point. And this is something which happens a lot on your price chart. That gaps, which are these empty spaces here on the chart, these gaps are getting filled over time. So please keep this in mind. Another thing, what these gaps often do is they create support/resistance levels on your chart. You can see it here. The end of this candle, the start of this gap, acts at this point as support. Price came down to the starting point of this candle, and then it jumped up, it bounced up from this particular level towards higher price levels. So this can happen as well with these gaps. So let's keep this in mind. Another example, let's look at NVIDIA once again here on the daily time frame. So what can we see here? Well, again, lots of things could have been pointed out, but two things which we can see very clearly in the middle part of this chart here is that we had two up gaps. You can see it here, price started down here, and then it gapped up all the way to this level. They seem a bit smaller than the gaps that we looked at before. And also here, this candle stopped here when the market closed, and then it gapped up then on the next day towards this price level. And also here we can state that these two up gaps, even within a very bullish symbol like NVIDIA, these gaps have been filled a couple of days or maybe weeks afterwards. You can see it here. We gapped up and we came down again exactly to this price level where this previous candle stopped, which started the gap, and it was filled. And same for this gap here, it got filled as well. This is not bound to a particular symbol. This can happen on every particular symbol in all stocks. Another example, Tesla on the daily time frame. What do we see here? Oh, same pattern, same idea. Once again, we did see an up gap here. You can see price from this price level gapped up to this level, and then it took a long time. This was November or maybe October 2024. Then it took, almost half a year until price once again came down to this level where this gap started. Once again, this is what we call a gap fill. This gap was filled, and where did the price stop? I was like magic. It stopped exactly at the lower bounds of this gap here, of this filled gap, which acts at this point as support. Please keep this in mind. This is going to become important within this presentation. And one last example, here we have Bloom Energy on the daily time frame. Once again, there's a reason why I'm choosing the daily time frame at this point. But just keep in mind that what we will discover today is applicable for longer term trades, but also for day trades. Yeah? And please keep this in the back of your head as I proceed. So also here we can see a bunch of gaps for this particular stock, for example, this one here, an up gap within a very bullish stock. Yeah. Also, this up gap, yeah, later on was filled. Now, price came back down exactly to the starting point of this gap until it took off in the bullish direction. So over and over again, we can see these gaps to get filled. You can already see that perhaps one common theme is, well, we're going to be talking about gaps today and what they mean to the market, what they mean when it comes to finding trade ideas and trade setups. So what are these gaps? Let me, go back a little bit and give you some context what these gaps actually are. Well, first off, and I think this became obvious from the examples that I've shown you today, a gap basically is or happens when there is a significant difference between the previous close price and the next open price. You can see it here. This was yesterday's close, let's say, or the previous close at this level. And then the next day, when the market opened, it was much, much higher. There's a big room in the middle. There's space in the middle. That's what we call a gap. And these can happen to the upwards direction, but also to the downwards direction. So gaps typically occur, of course, when the market closes. So when the market never closes, like Bitcoin, for example, or the cryptos, they trade 24/7. You typically won't see these gaps. But when the market closes, the market closes if it's a stock market at 4 p.m. Eastern time every day during the week. And on Friday, it closes for the entire weekend. These are market closures. And when the market reopens, sometimes we can witness these gaps. And these can be created by all kinds of things. We're not going to get too much into this, but some examples that we see all the time are earnings gaps, for example. So the market closes, the company announces earnings after the market close, and then the next day when it reopens, well, it opens at a much different level, either higher up or perhaps lower down. This is one of the reasons why these gaps can be created. All right. Now, what we can also state is that gaps can occur to the upside, but also to the downside. So if a gap occurs to the upside, say we are opening up higher at a higher price level, we call this an up gap. And if it happens to the downside, when we open up at the lower price level, we call this a down gap. And this terminology is going to become important later on as we distinguish between these two different gaps. Now, the purist among you may also differentiate between what we call overlapping gaps and non-overlapping gaps. So what are these? Well, a non-overlapping gap is when we truly have a completely empty space between these two candles. You can see it here in the middle between this candle and this candle. There's nothing overlapping, nothing touching there. It's completely empty. An overlapping gap, it's not empty. You can see it here. This is also considered a gap, where this candle closed at this point here and it reopened at this level here. But the wicks of these two candles, well, they overlap. But the close and open price, they're gappy, but the wicks are overlapping. We call this an overlapping gap. Now, some of the people out there, the technicians out there, they only consider the non-overlapping gaps as valid. Some other ones consider these ones as valid as well. That's up to the trader. And the beautiful thing about what I'm going to show you is it's something that you can choose, to consider or not to consider. All right. So moving on, a bit more theory, and then we're going to get to a very concrete demo in just a bit. Now, gaps often get filled, but not always. Of course, there's no guarantees. There are no guarantees in trading, of course. It may not happen, but oftentimes it will happen. And the likelihood of a gap fill depends on a couple of factors. It definitely depends on the symbol. Some symbols are more prone to gap fills than others. Definitely, hands down, we have hard facts for this. It also depends on the current trend direction and other technical factors. For example, where's support, where's resistance, where are high volume nodes, low volume nodes, and so forth. So some gaps get filled, like this one here, 100% gap fill. Other ones are only partially filled or perhaps not filled at all. But the tendency is, and this is what I'm going to be hinting at today, most gaps, they will get filled. And how we can find these gaps that are likely to get filled, we're going to discover today. Also, uh, as I mentioned before, this also depends on symbol to symbol. So some symbols are more likely to have gap fills. And there's also differentiation to be made between up gaps to be filled and down gaps to be filled. And for example, if you look at this little table here for a hypothetical symbol, we can say that 39% or sorry, not 39%, 100%, all 39 gaps that this stock had, all 39 down gaps that this particular stock had, were filled over time. And it took, on average, 114 days to fill this gap. Quite a long time. But for the up gaps, where the price gapped higher, the fill percentage was, in quotes, only 79.5%. And it took about 49.3% for a gap fill to happen. So it really depends, but on symbol to symbol. And as we will see, some symbols, they are more likely to have gap fills than others. And of course, the question is, how can we find these symbols when these gaps occur? Now, we're going to get to this in a bit. Also, a gap fill, the fill of the gap, can occur within the same day, right after the gap happened, or it can unfold over multiple days, weeks, or even months. You can see it here. Met these little up gaps, and a couple of days later, these are all daily bars. Eventually, we came down to fill this gap. So this here probably took maybe a week, maybe a bit longer. The same thing here, it took a couple of days to fill these gaps. So this can be rather fast, or like in this example here for Tesla. Remember Tesla at the very beginning? We gapped up, and then we came all the way down a couple of months later. It took several months to have this gap fill. You can see it here. The gap fill all the way down. All right. Okay, one more thing. Gaps, of course, can be traded. And the fun fact is, and something that you may not realize, is that gaps can be traded both from a day trading perspective, but also from a swing trading perspective. So, a case in point, this morning, for example, we scanned for gaps in the S&P 500 and some other symbols. And one symbol that we saw was this one here. You can see it here. This is I think a 5-minute chart, or maybe a 15, probably a 5-minute chart. The market closed yesterday, and this is a real example from today. It closed down here and then reopened. It closed down at 67 or maybe 68, then it reopened all the way here at around 74. That's a huge gap. That's 10, 12, 14, whatever percent above this price. That's a really big gap. And sometimes, when you notice these gaps and you notice some early signs within the starting trading day. These are 5-minute candles, which go towards the gap fill, the starting point of the gap. And these can be traded. What I've done, for example, this morning, I entered short after this retracement. The price went down initially here, then came back up, and I shorted this stock, which I then closed out a bit later on today for a small profit. So these are tradable from a day trading point of view, 100%. Now, and how this works, we're going to discuss together today. But of course, they can also be traded from a swing trading point of view. You would take a longer perspective, anticipating a gap fill. And it doesn't mean right away when you see a gap, okay, I want to take a position, anticipating this fill right away. There are some signs that will lead up to this. What these signs are, we're going to discover together today as well. And lastly, these gaps oftentimes provide valuable information about key support and key resistance levels. We can see it here with Tesla one more time. This old gap from November, or maybe October 2024, the lower end of it, was acting as support later on. My price came all the way down. We filled the gap, retested it once again here, and then we took off. Now, the boundaries of these gaps, they can act as support and also as resistance. All right, so enough theory. Now let's talk about something real practical. How can we spot these gaps? Well, guess what, guys? You may have guessed it already. We have developed a brand new indicator, right of the hot press today called Gap IQ, which specializes in detecting, visualizing, and giving you insightful information about gaps on your price chart. So see all your gaps. It will visualize all the different gaps, the filled ones, but also the unfilled ones directly on your price chart. It will also come, I'm going to see this in a second, with insightful statistics. You can see this little box here, but how many of these gaps are still unfilled? How many of these gaps have been filled? What is the fill percentage? And how long does it take on average to fill a gap? And uh, it also comes with a powerful scanner, allowing you to scan for stocks which currently are perhaps in the process of filling a gap, or perhaps a stock which currently, just in the last trading day, just had a gap. All these are tradable. All these are tools which you can use to identify powerful setups. All right, now without further ado, let's check it out on the price chart. And at this point, Niklas will come on. Niklas, are you there? Are you
Yeah,
ready to
and
give us a
we actually
nice, yeah?
100%, and we had a lot of questions that I had to tell them, hey, wait a second. Some questions like, are we going to figure out what's the average amount of days to fill a gap? And really, we're going to see that Daniel, you kind of underplayed just how useful it can be, and I think we're finding out today as well when we tried to trade with it, and other days it's extremely useful. So hopefully you can see my screen, Daniel. Hello, everybody.
1 second. Yeah, I'm just gonna stop sharing mine. And yeah, we can see it. Please take it away, Nicholas.
Okay, so guys, so there are many, many visuals. I think this is one of the indicators where we have probably the most settings and features that we've ever had in an indicator. So we're going to start it off kind of bare bones. And what we're going to start off here, I've got the indicator applied to the chart. It's called Gap IQ. And this is before, I've disabled a bunch of features. We're just going to see what it shows at first. So number one, what are gaps, right? So gaps, like Daniel defined, they're basically a significant distance between the close price the previous day. I'm on a daily chart of a stock called Waste Management Incorporated up here. So this was the closing price of Monday, October 27th. It happened to gap down. It opened down here around $198.64, $199. And this was identified as a significant gap. And you can see here on this candle, the little wick came up, and we can see it shows us the progress that the bar made for filling that gap. Now, we can also look back. This indicator shows current gaps, historical gaps, and we're going to slowly walk through over the next, let's say, 15 minutes, why this information is relevant. So this was what we call a down gap. Now, why are down gaps colored with basically a bullish color, green? Well, we'll see soon with the indicator's other features that gaps statistically tend to be filled eventually on most stocks. And when they aren't filled eventually, well, it tends to give you a bias and a directionality that you might want to trade the stock towards. And the power of this indicator is that it actually comes with a lot of statistics that give you this information. That's really, especially when we see the scanner, that's what gives it the power. So here, we gap down this stock. Let's zoom out a bit. Waste Management. Look, it's in an uptrend. Very obviously, it doesn't take a genius to see that this stock's in an uptrend. And when you gap down like this, we color it green, or we give it the bullish color. And the indicator, has settings for your bullish color, and you can use color themes, as we'll see shortly. This gap is colored green because we expect it to eventually be filled to the upside. And that's called a down gap. So it's kind of the inverse of your intuition. A down gap would be red, a up gap would be green. But no, when you're talking about gaps, it's because there was a market inefficiency or an unexpected movement, which will probably be corrected. So first of all, we got these gaps. We got a down gap. And then over here, for example, let me find one right here on Waste Management. Over here, we had an up gap. So price closed right here. Price opened on the next day up here. It came down, basically filled that gap. And actually, this is interesting. I didn't know this. So on this day right here, price closed. This was on Tuesday, November 5th, 2024. Closed there, opened up here, dropped all the way down. Look where it dropped down to the high of that bar. It filled the gap. These gaps, it's not something we can explain. I mean, who knows what's going on behind the scenes, but gaps tend to get filled, and we'll see, it's not just anecdotal, there are statistics. And look what happened afterwards. We flew up, so we came down, retraced. If you know some of our other indicators, you'll know there's such thing as like a break retrace. We come down, we retrace. Look where it came back down to before it found support, before it bounced back up again, almost to the T of the close of that bar. So we've noticed these patterns over and over, and that's why we have the statistics, we have the scans. Gaps are extremely useful pieces of information, 100%. And over here, for example, we've also noticed some other patterns where we gap down. Look where it bounced off of the tip of this other gap over here. We come up. Once it gets to the end range of that gap, it accelerates upwards. So there's a lot of like confluent patterns we can see. But let's just move on. So these are what we call gaps, right? So there's an up gap, which generally is kind of bearish, depending on the statistics. If you gap upwards, well, what happens when you gap upwards on a stock or a future? Well, it means that everybody who had held the stock the night before or the weekend before, let's say you bought a stock on Friday and then Monday gaps up 20%. Well, what are you going to do? Are you going to hold the stock? No, you're probably going to sell. So an up gap is usually bearish. That's why we color up gaps red and down gaps green, because if people shorted up here or people were waiting to buy up here, if we gap down, they're probably going to start buying. So we colored that green because it's bullish. It's an inefficiency which lends itself towards the predicted future of people starting to buy, cover their shorts, buy in on a pullback, etc. And we'll see how that develops. So this is like level one, big time level one of the indicator. So we're going to look at the next chart. The next chart here, just close these little notifications here, is well, the next level of the indicator is we show basically the percentage fill of the gaps that have occurred. So we can see over here on waste management, just, when was this? Tuesday, we gap down and we can see, well, on the day, actually, let me come over to this intraday chart. So I just swapped over to a 15-minute chart of that stock, and I'm jumping a bit ahead, but the real interesting thing, and we looked at and we researched a lot of gap trading indicators on TradingView. We tried to outdo every single one of them. Is here's a daily chart, right? So we can see that price gap down. We color it green because we expect price to fill the gap generally, but that's on a daily chart. But when you hop to an intraday chart, we're also telling you, well, where is the most recent daily gap? So here I'm on a 15-minute chart, and we can see this was the daily gap. It colors it out for you. And then we find out, well, how much percentage of that gap has actually been filled? And here today, we came up, we filled 66%, or this was Tuesday. Wednesday, when we opened up, we kind of fell out of it. But we'll see how the statistics play into this. So here, this was okay, percentage filling. Okay, so this is one feature that we can see. Now, let me hop over to another chart. Okay, so I think this is where it starts to get interesting. We're going to see the real power of this indicator is not only being able to find out what's happening on a current chart, which is very useful, but being able to find countless trade setups. Like especially if you import a watch list, we're going to see you're able to find so many trade setups. And Daniel actually has an example. We took like some trades today, just really good setups that are very easy to find based on this logic. And there's so many scan capabilities with it. So here on this chart, I've hopped over to the same stock, waste management, but now I've enabled what we call our statistics table. So right here, let me just open up the settings. Down here, there's a lot of settings to control everything. We decided to show the statistics and show whatever the nearest gaps are, and we turned on what we call mentor mode. So I'm on a daily chart of waste management, and what we're able to tell here is that inside of the statistics table, over here, all the gaps in either direction, there were 19 since 2000 and 2000 December 31st. And you can decide whenever you want the statistics to look back to, it's a parameter, that there have been only 19 up gaps that have not been filled. And of all the down gaps, so pay attention here, this down gap here, which just happened on Tuesday, so yesterday. So, maybe you're holding this stock. Maybe you're holding waste management at $214. We gap down to 199. We get a big down gap. Well, we have this statistical reliability that only one time since 2000 has this gap not eventually been filled, has price not eventually risen above, which is an important statistic. We use this, and one second, let me just get this next chart ready. We use this in order to interpret, well, how might we react to this? So maybe you're holding a stock, maybe you're looking for a trade opportunity on this stock. You can use these statistics in the gaps to confirm whether or not you expect price to eventually fill this gap. And you can tie this in, and I'm going to get to this point in a second, with the other information you have on a chart. And we're going to see with gaps, if you know anything about our other indicators, I think this is a good example actually back here. There's things called liquidity levels, which is where there tend to be large amounts of orders. So let's think about this. Have you ever wondered why a gap occurs? So the market closed here on Monday at 184, and then it opened in pre-market, or once the market really opened at, let's say, 191. Well, it's not the retail trader that's really deciding the opening price of the stock, right? It is institutions or larger players. These are areas where there's large amounts of liquidity and large amounts of orders waiting to be filled, and they often act as support. So we see here, we gapped up, price ran up, it retraced almost to the area where the gap began. We can see this gap range. And over here, similarly, and this is actually today, this gap is eventually going to be filled. We can get a lot of information about this because historically, since 2000, it's never not been filled. We can look at a gap like this to look for a position or a place on the chart where we can begin to enter. Now, this is actually, this is one thing. And Daniel, please cut me off if you have any questions. But here, look at this. We're going to see these
Going.
statistics if you get
Yeah.
used to them. On a chart like this, look, there's not that much information. This stock does not happen to have that many gaps. We have 19, 24. That's not a large sample size. We have one unfilled, two unfilled. And the one unfilled here is the current one. But if we hop over to something like SFM, which is called Sprouts Farmers Market, we can see actually, there's not that much of a sample here. We're going to get to a better example shortly. But the ratio is a lot different. From the up gaps that we've seen, 7 out of 16 plus 7 is what? 23. Almost 1/3 of all of the up gaps, which are these red gaps right here. And these are definable. You can change your colors with your color theme. Almost 1/3 never get filled, which basically means every time an up gap happens, so price gaps upwards, price doesn't even retrace. So when we get a retracement like we've seen recently, where prices come back down to one of these up gaps, this might actually be a really nice spot to buy, viewing it in the larger context of the uptrend. This might be a great retracement area because there's really a low chance that we're actually going to fill this, or not, relatively low chance that we're going to fully fill this zone or fully fill this zone. So it gives you a lot of different exit and entry points and targets and stops. And as we'll see later, there are patterns of behavior that become predictable, especially on intraday timeframes, or at least later on, as we'll speak about. So here we came down. Look at this. We knew about. So if I go on replay mode, let me use this. Let's hop all the way back here. This is Monday, September 2024. Wait for this to load. Look at this zone right here, right? As it's developing. We had a gap back in 2024. It's giving us these historical levels where large players in the market have shown a willingness to provide liquidity or have held up these gaps. And it's just one of those things like Fibonacci where it tends to play out and the statistics speak for themselves. These gaps don't get filled. Don't tend to get filled, the up gaps. When price dropped, imagine all the traders, the investors that panicked as we dropped from 172 down to 199, 99 point, what is this? 98.75. Where did it stop dropping? With inside of the gap range, right here. They really are liquidity levels and liquidity zones. If you know about our liquidity IQ indicator, they're very similar. And they're based on similar topics because it's where the big players are placing their orders and where they kind of have unfinished business. So SFM, this is a stock where, as opposed to WM, I'm just trying to give you an intuition for what we can infer from from statistics. SFM over here, we can see there's clearly a bullish bias because every time we gap up, it's not that high of a probability that we're actually going to go back down. So you want to buy it. People are eager to buy it. When we look at waste management, it doesn't matter if it gaps up or down, it tends to fill the gap. So it's more like a rangy symbol where you kind of can be lazy on entering in on the trend. Whereas with SFM, it's not. This might actually be a great buying area down here. And we've got these statistics to back it up. And if there's ever a down gap, well, look, there's a 100% rate. It's going to be filled. Maybe we can buy it within this area. And just to show the customizability, maybe there's a lot of stuff on your chart. We're going to have this in the training session, I think in maybe a couple weeks or a week. I'm not entirely certain, but maybe we don't want to see every single gap. Maybe we just want to see gaps that are, 50% larger than the ones we're detecting right now. We can change that in the settings. Let me give it a change right here. And boom, we're filtering for only the extremely large gaps, which may end up more important. And we can kind of treat it like a personal research tool, which we'll see with the scanner that allows us to find these things, to find these sort of discrepancies in behaviors with symbols. So, Daniel, should I hop
Yes,
over now to the
let's
replay?
let's do it. Yeah, let's see how the things play out. And I'm also eager to see the scanner in just a bit. Let's do it.
Sure.
Yeah.
Okay, so I'll go kind of quick here on the replay mode. So this is an example of a trade we might have been able, and Daniel's going to touch on this later. This was on Amazon at the start of this August. So what happened? This was when, actually August 1st. So August 1st, Amazon, and this is the indicator with its default settings, dropped from basically 234 all the way down to 217. And at this point in time, this is the information the indicator was giving us on its own. It said we have a down gap. The top is 234, the bottom is 217.21. And we can see from the statistics, now look, this is an up gap right here, okay? This gap that we came up to. Almost 30%, so we can kind of round it up to almost a third of gaps like this don't get filled historically on Amazon because Amazon goes up a lot, right? It's one of the big tech stocks. And it's already kind of been filled as much as a gap can be expected to fill on Amazon. So we know that there's not really a high probability. It's definitely not sure that price is going to go all the way down to here. That's not statistically true since the year 2000. But we know that this gap above us, the gap we just made, a down gap, it's almost 100% chance that that's going to get filled pretty soon. Only one gap to this downside has never been filled on Amazon, and it's the
And
current one.
it's this gap exactly.
Exactly. And on the next bar, when we drop down into here, this level we'll see actually starts to act as sort of a support. Like Daniel was mentioning before, where the levels we come down to act as support and the levels we go up to act as resistance. We can see we bounce off of it. This
And
is
look how the
mid-August.
numbers are changing as the gap fill progresses. Yeah, this percentage value in there, it goes up. And so this all updates in real time as more data flows in. Yeah.
Exactly. And we got filled within about a month and a half. And you can see here the statistics. This was a question from Ed. It says it takes about 101 trading days, which is, I think, maybe 5.5, 6 months. But, we can reduce this to look at maybe more recent data. So let's see what happens if we look at from 2015 until now. Oh, okay. And the data changed. Now we can see 0% and it's basically the same, but it takes about a month and a bit of trading days in order for a gap to be filled, which we can see fulfilled basically right here. So we've got kind of statistical predictability.
And the reason why it makes sense sometimes to change the start date for calculating your statistics, because market conditions may be so significantly different right now or recently than they were maybe 20 years ago. So maybe you don't want to take into account what happened a really long time ago. You want to be a bit more recent, just to get a bit more recent statistics and which perhaps are more insightful at this point. You can see
And
more recently, it took much less time to fill a gap than if you would have considered the average gap fill time for the last 25 years in Amazon.
And that's a good thing, going forward for all traders. That's why we set the default to 2001 or the end of 2000, because the dot-com boom really skewed a lot of information about gaps. And the dot-com boom was really an anomaly when you're doing statistics about stocks. So just be aware, if there's ever another dot-com boom or AI boom, be aware of that if you are doing trading statistics. And the next one I'm going to look at is, oh, well, here's an example on eBay. So eBay, this is pretty anomalous. Since 2000, there's been 106 up gaps. 12.3% of them are unfilled. This is an up gap right here. I've got a different color theme, but that's an up gap. It tells us that's up. 12.3%, usually on most stocks, gaps get filled in both directions, but we could see on this one, all the down gaps got filled. meaning this is a super bullish stock, 151 times. Every time there's a down gap, unless you think you're going to be the 1 out of 152 scenario, you can pretty much expect that if there's a down gap, it's going to be filled. It's happened 100% of the time over the past, 25 years, basically.
Yeah. And
Here,
Nicholas, real quick, for all of those who, sometimes if you talk about gaps for the first time, there's something you have to train your brain a little bit about is when you hear down gap, price went down, it's actually a bullish setup, because price may come back up again. And this is also the reason, and Nicholas mentioned this before, why we are coloring these down gaps with a greenish color and the up gaps, which at first glance, when you don't really pay attention, may sound like something bullish. Actually, it's a bearish thing. So we call the up gaps reddish and the down gaps greenish, just because oftentimes that's the play you want to look at. Okay, so just something to
yeah,
train your
100%,
brain a little bit
exactly.
about. Yeah,
That's why we put these colors here. So when there's a down gap, let's say we come down. Well, if down gaps tend to get filled, meaning basically a down gap, if you think about it, it's pulling downwards, right? It's pullback. So if it's a bullish stock, a down gap tends to get filled, like on eBay. 100% have been filled. If you ever see a down gap on eBay, you just find a nice entry price and you got a 1 in 152 chance of it being filled eventually. Since 2000. And for up gaps, so if we're bullish, and let me try to find one that wasn't filled, like right over here, if there's an up gap, well, you might want to be a little eager to buy because these up gaps aren't always filled. 13 times out of 106 since 2000 have these not been filled, because it's a very bullish stock. So if you jump up, you're not guaranteed that you're going to be able to get a cheap price, anytime soon. So this was eBay. I think we've looked at a couple of them. Now, the most interesting part of this indicator, Daniel, I think now is making use of the Pine Beta screener, or the Pine Screener Beta. You think
yeah.
we should
So
jump
for
over to
those
that?
of you, yeah, definitely, let's do it. And for those of you, of course, we're using TradingView here to demo this indicator. But if you don't know yet, TradingView has released, when was it? Maybe a half a year ago, maybe 4 months ago, a screener which you can use for custom scanning. So what this allows us to do is we can look for custom setups using our Gap IQ indicator, which is 100% compatible with this new feature in TradingView, the Pine Scanner. It has a bit of a strange name, and it has to do with the programming language for TradingView is called Pine Script. They call it Pine Scanner. That's where the name comes from. And the cool thing is, with this feature, you can now use TradingView for scanning purposes. This was something which was not available before. It's not available for every indicator, but it is possible for our Gap IQ indicator. And how this works, now we can find interesting setups throughout hundreds and thousands of stocks. Nick's going to show you now.
Yeah, and okay, so it's very nice, of course, it might seem abstract if you're looking at a swing trading time frame or a day trading time frame. It's nice, okay, there's an up gap, but that might take a few weeks to play out. Well, this is where the power really comes in. So I'm going to turn off some of these features and we're going to begin from scratch. So in TradingView, basically, if you have something like Gap IQ, if you come up to your indicators button right here and you click to invite only, I actually don't have it here because I developed on this account, but if you come to invite only, you're going to see the Gap IQ indicator. And if I search Gap IQ, I'll have it on my account. All you need to do is hover your mouse here, you click this little star, and you're going to add it to your favorites. So here it says remove from my favorites because it's in my favorites. You add it to your favorites. Then you come over to the TradingView homepage, which will look, the toolbar up here will look like this. You go to products, screeners, Pine Beta. And when you click Pine Beta, it's going to open up a window that looks, let me just remove this. It'll look like this. And then you choose your indicator, and only the indicators you have favorited will be available in here. So I'm going to select Gap IQ. Then you select your watch list. So um, you can build your own watch list, but also through Daniel. I mean, I don't know. Maybe we can provide that S&P 500 list. That'd be cool if we can provide it to
Yeah.
users to import it. But you select your watch list. You can create your own watch list. So I'm selecting the S&P 500. I've imported 500 symbols, nearly 497. And now all you have to do is click scan. So we click scan.
Yeah, this
Takes
is
a, I think
lightning fast. This takes a couple of seconds. Yeah.
4 seconds. Then all of a sudden, now we have all these symbols from the S&P 500. Now we can get all the information we were just talking about. For example, let's go over to, WM at this day, or Amazon, or let's find one, SFM. There's so much information that we can scan for. So what we have are called columns. You click over on this button, and we have tons of information you can scan for. So there's over 25 different possible pieces of information. There's a lot in this indicator that we haven't covered today that we're going to cover later in trading sessions. But number one, I might want to find out, if I'm looking for trading opportunities, I don't want to be looking for, trying to do that manually. I could just click this button, put on the column, what is gap today? So what created a gap today? And this often creates either swing trading opportunities or day trading opportunities like Daniel took on, I think, CTSH, this stock
Yeah.
right here. So Daniel, we found this. We scanned this morning right here using what I'm about to show you. Daniel watched it. We retraced up here. Daniel shorted it, and then he covered somewhere down here. He made a nice profit, a couple percent there just based off this scan. To test out the screener capacity. So we click gap today. So we're going to see this. Now it says 0, 0, 0. 0 means that it didn't gap today. It didn't gap up, didn't gap down. It's just within the context of gaps, a boring stock. We can ascend it, or we can create it so it sorts ascending by clicking this arrow. And all the stocks that have a positive 1, these are stocks that gapped up today. So for example, Fortive Corporation. Let me hop over to Fortive Corporation, FTV. And yeah, it gapped up today. And I was gonna say,
Oh,
when
wow, that
something
was
gaps
beautiful.
up, what do you want? You want bearish action. Well, what happened on this stock today? Oh, it gapped up. You would have found that in the morning with the scan, and then it totally filled the. Actually, Daniel, I wish we took this trade. Oh my
Yeah.
God, that's like a almost 10. That's a 10% gain in
Yeah,
a day.
truth be told, this morning, as I mentioned before, the indicator was hot off the press. It was not completely done yet. It's completed now. We weren't able to scan through all of these, but yeah, that would have been, of course, a beautiful day trading setup for a potential gap fill or an approach or an attempt to fill within the same day. So yeah, it came to 89.4% of its fill. That's pretty cool.
That's
Definitely
crazy,
shortable.
and
Yeah.
this would show. So right here, we have everything that gapped up. Okay. That's one of, there's 27 different plots, and there's a lot of information we're not talking about. So gap today, these are the ones that gapped up with a positive 1. There is, out of the 497 symbols, we got 1, 2, 3, 6. We got 9 symbols out of 497. Teradyne, I think, was also interesting. I don't know how it played out, but
Yeah, that one went up, I
basically,
think.
it
Yeah.
went
It
up.
initially went down, but then it filtered for 30%. It's still, these are tradable things from a day trading point of view. And we're
That's
going
a
to
big
show
percent.
you.
That's almost
Yeah.
4% gain
Yeah.
right there.
hmm Yeah. So this is day trading, but of course, you can also use the scanner for more longer term setups. And one thing what we find interesting there is when there's a stock which has unfilled gaps, first off, this could have happened a bit longer ago, maybe a week ago, maybe even a month ago, and the gap fill is in progress. It has started to fill. And we see this as a very promising opportunity. And how this works, will Nicholas show you now.
And even more than that, actually,
Yeah.
we didn't touch on it, but all right. So number one is rule number one. Just with the way the scanner works, you don't change this. Don't change the time frame. Leave it on 1 day because it's going to add a lot more power. So right here, not only do we know if something gapped today, that's good for intraday trading. And you can also click this button here, move percentage move to fill from current price. This actually tells you if the gap gets filled, how much do you stand to gain on if the gap fully fills. So something like 51%, it's probably not going to move 51% in a day. But something like Verizon or Otis, maybe you're going to gain that 2%, 8% day trading. But if you're not day trading, you don't need to look at what gap today, right? It doesn't matter. Instead, what you'll click on is something called filtered up gap or filtered down gap in progress. Now, in the indicator settings, we have, let me come down here, we call trend alignment, which is basically just a daily EMA 20 above or below a daily EMA 100, which tells us, are we in an uptrend or a downtrend on the daily chart? And once that is enabled, basically anything that shows up in this column, if I filter it, so it shows me values. So these are the ones that actually have that. It means that we are within a gap that has not been filled, and the trend is telling us on the daily chart that we are in the direction of filling it. So let me just click trend direction. This is an up gap. Now look, we got negatives. We got opposites here, right? But you see that they're all perfectly opposite. Why? Because if something has a filtered down gap, second, actually, let me confirm this right here. Filtered up gap, filtered down gap. let's take a, actually, no, no, let's take a look right here. So Vertex, VRTX. Let's go to the daily chart on VRTX. And let's see what we have brewing here. And I'm going to come back into the Pine screener, and I'm going to turn on the amount we have to fill. So let's come over to VRTX right here. And Pine screener. Okay, I can turn
Yeah,
off
and
trend
guys, if
direction
this
just for
sounds
day trading.
complicated, we have planned a master class on how to run these scans. So we're just going to show you that it's possible to scan for these setups, and you'll find some very interesting ones. But Nicholas is going to find just one particular example that we've been
Yeah,
looking
so
at
from the
before.
daily time frame, if
Yeah,
we are to fill this gap, and right now we have a downtrend, actually. That was information. Sorry, I made a mistake. If we look at the trend direction, we have to gauge this information. So there was a down gap. And when you have a down gap, you want the trend to be upwards, right? Because you gap down. If you expect the gap to fill, you want the trend to be upwards because that's a pullback. Here, we have a down gap and the trend is downwards. So we wouldn't really expect this intuitively to be filled. This gap was down, but the trend is also down. So are we expecting it to fill? Perhaps not. We want to look for something that has an inverse. So if you look here at filtered up gaps, we want to see something that's 1 second. Oops. And be aware that the screener is still in beta. So you see that said that was an error. That's not related to the indicators. We just refresh it and run the scan again. Boom. Find screener beta. And usually you might get an error when sorting. Just refresh the page. It's not going to cause any problems. Come here,
yeah.
ideally.
And some of the scans that we can run, as I mentioned before, are scans that
Oops.
what if we have a gap fill in progress? It just started. Because to me, this is something that we typically want to wait for is because it can take a long time for this gap fill to start. So what we want to wait for is for price to actually enter into the gap fill area and have a trend direction in the direction of the gap fill. That's the setup that we like the most at this point, yeah, where this has started already, because then there's a good chance that this gap fill is about to complete. Because I don't think we need to go through the entire thing. I think there might be a bug with trading view here, but this is possible. And we've done this all day today to find these stocks, for example. Yeah, where the
Sure.
gap fill is in progress. So let me take the screen back because I want to now explain to everyone how we can or everybody can take advantage of this brand new indicator because we do have a special offer there. And one thing also to mention is, and I hope my screen is visible now. Is it? Yeah, there we go. Is that what we've shown you today is indeed was just an overview of the most important features, but we have so many additional advanced features also to build in, which we couldn't touch upon today. For example, we have a scan and visualization available for pair value gaps, which are different from these price gaps, and they require a different price pattern. That's possible. You can customize your gap types, whether you want to have an overlapping gap or a non-overlapping gap. You can also customize your gap sizes. You can use trend filtering to only find gaps or scan for gaps which are in direction of the trend when the fill comes. We have more than 20 scan criteria. You customize the start date for your statistics and basically anything that you see. All the visuals can be either turned on or turned off, and we have many different color themes for brighter screens, for darker charts, and so forth. This is all built into the indicator. So these are the things that we're going to cover in our upcoming masterclass on Gap IQ. Now, let me explain to you before we get to the last topic here, which we'll do afterwards. How can you take advantage of our Gap IQ indicator? Because we do have a special offer prepared. It's an early bird offer. As you can see, this is hot, right as hot off the press, basically just finished today. How can you take advantage of our Gap IQ indicator and how can you get access to it? So the regular price for Gap IQ is $997. That's the price that the indicator will be offered for, but this is not the price you would need to pay for today. So $997 is for lifetime access, but as a participant in this webinar, and for being here today to see the early release of this indicator, we will be offering this indicator not for $997, but for $999. but for just 497. That's a 50% discount, a special webinar price, and this will give you lifetime access to our Gap IQ indicator. It will be available for a limited time, and all you need to do, and Niklas, please put this link into the chat box. All you need to do is to go to tradingindicators.com/gap, which will bring you to our product page. You can read more about the indicator there. There are more examples there. All the features are listed there, and then you just enter the coupon code GAP at checkout. So tradingindicators.com/gap and enter the coupon code GAP at checkout. And once done, the price will be discounted from $9.97 to only $4.97. And I see a question coming in here. For which platforms is this indicator available? Well, let me tell you. And by the way, there are also 3 bonus offers which come with this purchase. I want to talk about these in a second. But let's talk about the platforms first. First off, of course, Gap IQ is available for TradingView. We've seen it there. It works great on TradingView. There was a small glitch there with the screener, but it works on the screener. We've done it all day today to test it out. So it's available for TradingView, and it will become available very soon, in a couple of days, also for NinjaTrader and for MotiveWave. And if you're trading with NinjaTrader or for MotiveWave, you can take advantage of this offer today. We're going to give you, while we are finalizing the NT8 version and the MotiveWave version, while we're finalizing these, we will give you TradingView access. And as soon as the NT8 and MotiveWave version becomes available, we will switch you over. This is the advantage that you can, start using the indicator right away. Chances are you will have a TradingView account in one way or the other, and you can get used to it while these NT8 and MotiveWave versions become available. All right. So what are the bonus offers that come with it? Well, first off, you will be invited to our next live trading workshop where we will use Gap IQ to find interesting day trades, but also swing trades. This workshop is scheduled for November 13th at 9:30 a.m. So we're going to put our money where our mouth is, so to say, and live trade with this indicator. Secondly, we will also hold a live masterclass, which is most likely to be a multi-session masterclass explaining you how to trade with this indicator. Which setups do we favor? What other technicals you may want to consider to trade with this indicator, to execute on a trade, and so forth. So this is in the planning. It's going to be a live masterclass, and you will be invited to attend this live masterclass. That's bonus number 2. And bonus number 3, of course, as you may know, you will also be invited to our exclusive live sessions that we have during the week, our Lunch and Learn sessions. The next one is scheduled already for November 4th at 12 p.m. Eastern Time. We also have a Discord channel to which you will get access. And once again, the normal price is $9.97 today. It's a special webinar price, only $4.97 for the lifetime access of this awesome indicator called Gap IQ. All right. Yes. Now let me go through some questions. Yeah.
One question I can answer from Olga. How are they traded? How is the volatility? Well, I don't have a great answer for that, but one thing we saw, we did a lot of research, we read several studies, is when there's a larger gap, there's more volatility subsequently. So that's something you can read from, and maybe something we can add as a sort of feature
in our masterclass, actually, what we're going to look at is which gap sizes are likely to fade. So one trade that we like, especially for day trading, is the gap fade trade, where actually I took this morning. My day trade I took is when a stock gaps up a lot, like but more than 5%. Oftentimes, the bigger, the better. If that happens, and you see signs when the market opens, this is also, by the way, the reason why we scheduled our live trading session for 9:30 a.m. because we want to see what's happening during the first candles when the market opens. If there are signs that after the gap, the market is coming towards a gap fill because it's fading the gap, there's a good chance, if some other techniques also line up, that at least the gap fill will be attempted. Might not be completed 100%, but price will at least initially move towards the gap fill. And from a day trading point of view, this is actionable. This is tradable.
And Daniel, can I actually share my screen for 1 second to help answer that question?
Sure, yeah.
Do you mind? Okay, yeah. So Yeah, so I forgot, or we didn't mention because we're waiting to do it in the class, but there's a lot of settings in the indicator. So you can actually set minimums and maximums for the size of the gaps. So how does the size of the gap affect the statistics? And on the chart, of course, you have things like fill rates. We can see here and over here. Actually, these don't have many sample sizes. We can get much larger sample sizes if we look back further or reduce the size, the minimum size of the gap. But here in the scanner, look, it takes 4 seconds to run the scan, and you can find out what's the percentage of the up gaps that get filled, what's the percentage of the down gaps, how many days does it generally take for an up gap or a down gap to fill? Where's the top, where's the bottom relative to current price? How old is the gap? There's literally everything we could think of, linguistically you can scan for. So I think we're really making use. This is the first indicator we've made where we're fully openly making use of the screener on TradingView, and I think it's only going to get better.
Yeah, exactly. So it's a brand new feature in TradingView, and not all indicators are compatible with that feature, but Gap IQ is compatible, and it's awesome. So we used it this morning to let me just share my screen again. To just one second. I had to find some interesting setups, and we actioned on it right away because it was so fascinating to see which setups have come up with this screener. All
Will
right.
be available for NinjaTrader very shortly. I would think I'm aiming, Daniel, for I maybe you should say, but maybe in the next few days for
Yeah,
NinjaTrader.
absolutely. Yeah, we're putting the final touches on the NT8 version, and this is going to be become available very soon. As I mentioned, it's hot off the press, and of course, TradingView is typically the platform we develop first for because it's the greatest common denominator of our user base. But NinjaTrader is a close second, and that's a priority for us. So is Wave as well. All right. As for Thinkorswim, unfortunately not. The reason why we cannot offer this for Thinkorswim is because Thinkorswim is very limited in terms of what can be computed. And you can see all these statistics, all the data, all the screening. That's something that takes a lot of computing power, and TradingView, no, sorry, Thinkorswim will not have this computing power.
Daniel,
All
can
right.
I answer these 2 questions here? I could share my screen,
Okay, sure.
unless you want to take it away.
No, please share your screen. Yeah.
Okay, so we have one question. All right, from Martin Boyd. Meta gap down on any earnings tonight. Can you look at it and analyze what might happen from here? Okay, so this is a good question. So first of all, I came on to the Meta, the chart on the 15-minute and on the daily. And with regular trading hours, of course, we don't see what you're talking about, right? Earnings came out in after hours. When I go to extended trading hours, we can see there is no gap. So right now there's no gap the indicator can detect. This is only going to be detectable, of course, tomorrow when the symbol reopens at 9:30 a.m. This gap, which is very significant. I mean, what's the ATR here? Maybe 5. This is going to be detected immediately by the symbol, by the indicator. And if we look at the daily chart, one second, let me just get this thing out of my way. If we hop over to the daily chart on and let me move the statistics back actually to the greatest possible minimum. This is way before Meta even became a company. Let's just let it recalculate. So that's going to be a down gap. And the down gaps, look, there's 26 of them in history. 100% of them have been filled. Takes an average of, let's say, 4.5 trading months, 77.5 trading days. So we're going to be gapping down to here. There's a very high chance that's going to be filled. And almost a quarter of all of these gaps down here, up gaps, which are colored red, and the coloring of the gaps is dependent on the theme you select in here. So if I select cosmic, see, okay, it looks like this. These gaps don't tend to get filled. A quarter of them don't get filled. So once we come down to these areas, if we even do, these are going to be nice areas to buy because we have the statistics to tell us that chances are they're not going to be filled. They've already been filled pretty significantly. Maybe we'll dip down to here. I mean, depending on the market, that's a long projection. But
Yeah.
all the down gaps that we're going to see a down gap tomorrow. That's a great point. Who is that from again?
And that's
That
yeah,
was from Martin. That's going to be filled most likely. I mean, 1 in 27 chances it's not going to be
it's
filled, which is like what is that?
and
3%?
you know what's going to be happening today? Not today, tomorrow is at this down gap. I believe we can verify this tomorrow. We're definitely going to discuss it in our lunch and learn session. It's probably going to coincide with our with a key support level as per liquidity IQ. So if you go back
Put
to the
this
daily
here.
time frame, oh,
Oh, onto the daily time frame.
yeah, just see where the levels are at that point. At
I just wanted
680,
to
I
see.
would imagine that this coincides with a key support level.
It actually, Daniel, I just wanted to see because I went into the 15-minute because I was expecting an intraday refill. Like if we came down here, maybe we refill some of this intraday. Look what's happening already. Liquidity captures at a support level.
Yeah, exactly. And this support level, you know, if this happens, if you gap down to a key technical level, this is another ingredient that we can use to anticipate a narrowing of the gap when the market opens tomorrow. So we have to see when the market actually opens what will happen. But this is one of the factors that we'll be looking for. And what these are exactly, we're going to show you in our masterclass and our other sessions. So I'm going to take the screen back, Nicholas,
Yep.
and to trade gaps effectively, it is essential to understand the context in which the gap occurred. What is the price structures? Are the technical levels to which we gap down to? What is the overall trend? What are the historical fill percentages? And guess what? These are different from symbol to symbol. Here's an example of what this will entail. And of course, the masterclass will cover all of it. This is a teaser. This is Amazon. Nicholas mentioned Amazon a bit earlier. Amazon gap down. We can see it here in August. We gap down from this price level here from 230 down to around 215 to 12, something like this. All right, so we see the gap. That's great, but that's not all we need because we also need to put this gap into context. Where did this gap occur? Okay, a couple of things. First off, we are in an uptrend. You can see this trend line here, number 3. That's an ascending trend line. You can believe me, Amazon has been a bullish stock for quite some time. So this is a down gap, basically a pullback within an uptrend. And as a trend trader, you may know that pullbacks are your best friends. These are the moments that you want to wait for. Yeah. And in this case, we get the extra bonus of this pullback being a gap, and gaps are likely to get filled. So give this extra bonus there. And if you look at these statistics, this is the only gap in the history of Amazon, which hasn't been filled yet. And the emphasis is on yet because this down gap is likely to get filled, taking all this into account. Yeah. And what these factors are, again, this will be topic of our master class. And here in this case, of course, hindsight is 2020. We can see this gap was filled a couple of weeks afterwards. The price came down. We were in this uptrend. We had great fill percentage. We filled the gap. And then if you look at the statistics here, we're back to 100%. Yeah, also this gap was filled. Here another example, how we will combine gap IQ. It works great on its own. You can use your own technical analysis, but it also works great with our flagship indicators like Liquidity IQ and MA Rush and also Volume IQ, which point out on your price chart here, where are key technical levels? What's the overarching trend? And once again, you can see it here, Amazon, it bounced down. It didn't just pull back, it's the same setup. So we gap down, which is a pullback in the uptrend, but it also coincided with this little green line here, this former resistance level, which is now acting as support. So we call this confluence. Multiple factors are coming together, forecasting the same price direction. So the price direction is a gap fill. That's the anticipation. This is further supported by the uptrend that we are in and the fact that we stopped gapping down at this key or at this former resistance level now acting as support. And of course, support is called support for a reason because price may be prevented from going further downwards. And instead, it will bounce from this level towards higher price levels. So once again, many different factors are pointing that to the fact that this gap is likely to get filled. So how this all works and how all these things play together, we will teach you in our masterclass that will be coming up. All right, so we're going to skip this example here. I'm going to answer some questions. Now I'm going to go back to our price chart. Just one second. There
Daniel,
we go.
can I
Yeah,
shoot those questions by you?
go for it.
Okay, so the first one is from Juan Hara. How does it work for futures markets? Well,
Just the same way. Yeah. So any markets which shows these gaps, they are applicable for our gap trading approach, be it a future or a futures market or a stock or an ETF, it doesn't matter. It could even be a currency symbol, which may have gaps over the weekend when they close. That's applicable as well. So the approach will be the same, but what we will teach you is that, just looking at a gap by itself, even though that's promising, may not give you all the odds in your favor that you want. You will also need to take into account some technical factors, support and resistance levels, liquidity levels. What is trend doing? Is the gap fill already in progress, and so forth. So that's important. Mhm.
Great. Another question from AM. Liquidity IQ, is that another indicator? Yes, it is.
Yes, it is. So that's we call gap IQ the missing piece because it complements perfectly our existing indicators like liquidity IQ and volume IQ. It's the one that adds to the market story. And as we always say, understanding why we are where we are right now in terms of price, how did we actually end up where we are right now, is so important for understanding what may happen in the future. Okay, this is absolutely key, and this is why we put a great deal of emphasis on understanding of what happened for price to end up where it is right now. Because only once we know this, we have the power to forecast what may happen in the future.
Daniel, can you please stop sharing your screen? I want to answer this next question. I have it ready.
Mm-hmm.
It's a question. Okay, what happened on October 22nd
Just a second.
on the Netflix down gap? Okay, so what would we see here? Well, number one, we can see, okay, first of all, we've got mentor mode, as we call it, enabled. There's a gap from 1241.35 to 1,142.90. We barely filled it, but that's not what's important. The first thing that's important is looking at what kind of gap is this? It's a down gap. You can see up here, the nearest down gap, it's telling us where that is. This is the only one out of 45 gaps historically that has not been filled. Of course, it's an upwards bias stock. Look at the likelihood of an up gap not being filled. Very high relative to most other symbols. So you don't want to rely on expecting this gap right here not to be filled. It's probably going to be filled, at least unless the market totally takes a downturn for many, many decades, or at least a little while. So the next thing we would do, like Daniel was mentioning, maybe this is a nice spot to buy. There is a large run up here. Maybe we can find a move downward. Is apply the other indicators. So Daniel was mentioning, like, look, we get more context. We can see we lost this support level. The next support level is down here, historically from here, around 1,050. We got another one at around 1,000, a clear, nice four-figure number. Got MA Rush. The momentum has been distinctly bullish all the way since February 2023. And of course, I think the most important one, if we turn these off, is volume IQ. Well, I can see that the volume starts to come in around 1,000, but there's lots of buyers around here. We know, at least statistically, from what I could tell, we can't presume, is this is going to be filled eventually, right? But you got to find a good spot to enter in on, which is generally where traders
Yeah.
start to enter.
And
And this actually, coincidentally corresponds. If you see, Daniel, I was going to say down here, which is not very optimistic if you're already owning the stock, around 990 to 900. That's where this gap existed previously.
yeah, it's interesting, and yeah, it works great with our existing indicators. But even just trade alone, if you just take off these indicators one more time, um, gap IQ can be used, and the way I would just keep it the way it is. Yeah.
Let me
Okay.
turn it down to the sensitivity to see if we can't get any more liquidity levels that are important. I
But
think there's no more gaps.
yeah, what I was about to say here, Nicholas, is that, or for everyone out there, is that one way we're gonna teach you how to trade this is to wait for this gap fill to start. So in this case, what we would not do potentially is to jump directly into a long trade here. We want this gap to be attempted to fill. Because to us, this is the start. This adds one more factor in your favor. Right now, we're still going down. We definitely want to see a price to stop going down and attempting the gap fill. You want to be inside this gap, basically. So inside this price range, we're not there yet. We're below this price range. But as price comes up into this green area above price, this is where we get interesting. And our scanner, the Pine scanner, will pick up these scenarios. We have a scan for this uh, in unfilled gaps. Just go down there. See how it's written? You need to be in the unfilled gap. Part of it. Right now, Netflix would not come up for this because we are below this unfilled gap.
And look at this, Daniel. Even on the 1 hour chart, 2 out of 145 are not filled. The second you get into here, the probability that we're going to move up there, especially if the trend direction lines up, is like 98%. It's actually
Yeah.
pretty impressive.
Yeah.
You know,
Absolutely. And yeah, so Netflix, It's a good moment, but of course, timing is important too. And this is what we're going to teach you how to time your entries to anticipate such a gap fill. And you can either do this completely standalone with this indicator, or, as Nicholas said, uh, pointed out, in combination with our flagship indicators. That's all possible. Perfect. All right. So I'm going to skip the screen back to answer a few more questions. Okay, what else do we have? So we answered, look at the platforms that this indicator is available for. And just to explain to a little bit what to expect once you take advantage of this offer. First of all, right off the bat, you will get a confirmation email with instructions on how to get started with the indicator. So on TradingView, for example, we're going to ask you for your TradingView username. We need this to enable your access. And you will get the email right away. You will also get links for upcoming webinars where we will cover this indicator. Okay, so that's all part of it. And of course, if you are looking for NinjaTrader and ModifWave, as mentioned before, you take advantage of this offer today for the special discounted price. We will give you right away TradingView access. So at least you have something there in the next couple of days. NinjaTrader is going to be the next one that's going to be rolled out. Afterwards, ModifWave. As soon as these versions are available and fully tested, we will make them available to you as well. And I saw a question whether we're going to be supporting ModifWave 6 or 7 or both versions. It's going to be both. I know there's still lots of users out there which use ModifWave 6. They're still waiting until ModifWave 7 matures a bit more. And yes, both versions of ModifWave will be supported.
Definitely. And from Marcus here, Marcus Nerwine, are the symbols I can scan limited? So MotiveWave and NinjaTrader, it's going to be limited to the symbols provided by the platform. I think they're basically unlimited, within reasonable means. For TradingView, doesn't matter the subscription you have. You can only put 1,000 symbols inside of a watch list, but you just create multiple watch lists. Let's say you have a subscription that allows you to only have 100, or it depends on, if you can access the Pine Beta screener. But just open up multiple tabs and scan across your different watch lists. So regardless of the platform, it is fairly unlimited within reasonable means, I would venture to say.
Absolutely. And there's always workarounds. And, Pine or the scanner and TradingView, it's brand new. You may not have used it yet. We're going to teach you how to use it. So part of our masterclass, and also in our upcoming Lunch and Learn session next Tuesday at 12 p.m. Eastern time, it's also going to be recorded, of course. We will show you exactly the steps that you need to do to set up your scanner, to find all these scan criteria, to run some scans on your own, and of course, how to interpret the scan results. What do the numbers mean, which you will see there? How can you open up a chart directly from the Pine script screener when you click on a symbol? All these things we're going to be teaching you step by step. All right. Perfect. Okay, so one more time. The offer is $497. It's a 50% discount from the regular price. So I think it's a great offer. This has been the result of a lot of development, testing, iteration, optimization work here at tradingindicators.com. We're happy with the result that we came up with. Our brand new Gap IQ indicator. And just to reiterate, what it comes with, it visualizes all these different gaps on your charts. It comes with a scanner. It comes with these statistics, all kinds of statistics. And if I show one more time the advanced features that sorry for jumping a little bit, that the indicator comes with, we can scan for fair value gaps, a topic that we didn't even cover today because I thought it would be too much to cover. Well, this is possible. We'll teach you this in the masterclass. You can customize your gap size.
Especially for day trading, Daniel, there's like the concept of confluence with fair value gaps, and that's what really for especially for day traders. We didn't even cover this because most people aren't day traders, but it's super useful.
Yeah, and you can customize your get types and sizes. And one thing I love to do, I didn't cover it today either, is to find what is a gap size, a minimum and a maximum gap size where it always gets filled. You can find these gap sizes using the indicator. It's basically your personal research assistant to find out like some insights about the market. You can do trend filtering, you can all these kind of scans. You can customize your start date for your statistics and basically all the visuals. You can make the indicator as complex or as simplistic as you want. And we have different color themes. So if you prefer a white chart background, no problem. If you prefer a black chart background, no problem as well. So 497 for lifetime. And all you need to do is to go to tradingindicators.com and enter the passcode GAP. All right. So with this, let me see if there are some questions
Heard that
remaining
question
that we
from
have.
Daniel. So there's no questions lingering yet.
I'm just gonna go through that list real quick here. Yeah. Is there a way to gauge the timeline on when a gap might be filled from ad? Yeah, absolutely. This is why our statistics, you can see it here on the right-hand side, average days to fill. That is how long it typically takes to fill the gap. And you can play around with the starting date for these statistics. So in this particular case, it might be a bit hard to read. We started uh, getting these stats from 1997, this particular example. Maybe it's a bit too long for you. Maybe you want to have it more recent. Well, you set it to a more recent date, maybe 2020 or 2022. And you can see, okay, since 2022, how long does it take to fill an up gap or a down gap for a particular symbol? And it's going to be different for from symbol to symbol, but at least now you know. Yeah. All right. Okay. What is being considered a gap by the indicator? Great question, David. So a gap, of course, always is something where the close price on the previous day is significantly different from the open price of the next day. But how significant this needs to be, that's a setting in the indicator that you can control. The indicator comes with reasonable defaults that we like, but you can control it completely using the indicator and the settings. And of
Daniel,
course, in our
there's also settings
masterclass,
for, as you mentioned, overlapping and non-overlapping, and it's kind of like it's your personal research tool,
yeah,
where you might want to find something where there's always 100% rate of filling, and we offer there's like a bunch of different features for you to tailor that if you're interested.
absolutely. Yeah, perfect. Okay, so that was that. That's some question about Modifwave we already answered. And one question about, can I scan for optionable stocks? So that's more like a trading view question. Uh, and I think at this point, probably not in TradingView. And the reason for this is because you will always scan through a watch list of yours. But since you control this watch list, you control what's in that watch list. You have to create this one. And we're happy to give you some common watch lists like the one for the S&P 500, for the Nasdaq 100, and so forth. Uh, but in there, I guess you would then filter within your watch list the stocks which are actually optionable or not, and then run the scan on those ones which are indeed optionable, if that's the trade that you want to do. Okay, perfect. All right, guys. Well, let me come back on the camera one more time. Okay, so I'm happy that so many of you stayed on. It is now 7:23 Eastern time, so we're about 1 hour and 30 minutes into this webinar about the unveiling of our Gap IQ indicator. And yeah, I hope you liked it. And you can see the usefulness, the utility of the indicator to find something which oftentimes is not so easy to spot. Yeah. Look at this chart here. Some gaps are obvious, other ones, especially if they're overlapping gaps, they're not so easy to spot. Yet these gaps are still very important. Yeah, because all these gaps, overlapping or not overlapping, they have forecasting properties. And gap fills are likely on many of these gaps. And how likely they are, the statistics will tell you. How does the gap indicator relate to seasonality? It's a different concept. So gap really happens. So what happens overnight? What happens when the market is closed, either overnight or over the weekend? Where does price jump to? These are jumps in price action. Where does price jump to which level? And depending where it jumps to, in which context this gap occurred. Are we trending up? Are we trending down? Are we near a key support level, near a key resistance level? All these things are to be taken into account to understand what may happen next. Seasonality is a bit different because seasonality is all about, what does a stock, for example, tend to do in November every year? So tend to go up or down. And then you can, use this information to place your trades accordingly. It's a great concept, but Gap IQ is a bit different. It's all about what happens when the market is closed, where something must be happening behind the scenes. Of course, things are always happening overnight, over the weekend. Some news may come in. There can be economical news, political news, all kinds of things, which will affect the price of the underlying, which may make this price to jump up or down. And depending on where it goes to, we can then gauge where it will may go next and if a gap fill is likely as a subsequent measure. All right. So I hope this answers this question, Olga. Perfect. All right, guys. So with this, I like to say thank you to everyone for staying with us this evening or this night. I know we have many German users in the room. It must be really late there. It's 1:30 a.m. in the morning in Germany, for example, also in Great Britain. It's very late. So thank you guys so much for spending the night, the evening, or the afternoon with us. It's been fun. And I'm excited to welcome everyone who came on board with this special. And we're definitely going to cover this indicator moving forward uh, in the next couple of weeks. The next event for you guys, if you came on board, is our member session on Tuesday, next Tuesday at 12 p.m. Eastern time. Of course, these sessions are being recorded. And Andrew's asking, will you travel to Melbourne? Yes, I will. Indeed, I'll be for a different topic. I will be in Melbourne in a couple of weeks. Excellent. Great. All right, guys. So thank you so much for staying. I'm going to say good night to everyone or goodbye to everyone. Thanks, Nicholas, for the great demo. Thanks for being here and talk to you soon. Bye, guys.